Welcome back. You're watching Stock Watch with me, Zinati Kuma, and joining me to take your stock-related questions tonight are Faheema Adia from Momentum Securities and David Shapiro from Sasfin Securities. Be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS on 41392 or on X using the hashtag StockWatch. Thank you so much for your time, lady and gent. Let me actually start with the lady here. And actually, interesting because these questions are directed at you, Faheema. But David, it's fine. You'll also get your shine. I'll also get to ask you the question, so don't worry. Let's start off with the your perspective on the outlook on gold. We know that it plays as an inflation hedge, and at times of global uncertainty, it can be a preferable asset class. However, gold does not provide an income, and I believe it is usually sentimentally valued. With rates expected to fall further, is there a space for gold in portfolios? Central banks of many countries stock up on gold also. Why is that so? Well, actually, let's start off with the space for gold in a portfolio. Is there always space for gold in a portfolio, Faheema?
Yeah, so I think we've seen a very strong run in the gold price. Recently, there was a bit of a pullback after we saw the dollar start to strengthen. That, of course, then makes gold look less attractive for other currency holders. But I mean, I think given this recent pullback in the gold price, there potentially is an opportunity now to maybe add a bit of exposure there. I do think in the long term, there definitely is a case for gold to go a lot higher, given, like you said, there is increased demand expected to come from central banks that have been diversifying away from the dollar. A key example of that would be China and a lot of other countries that are following suit in that regard. And gold is also seen as a safe haven in volatile climates. So I think given all the volatility we're seeing in the world right now with, the escalation in conflict in the Middle East, that will also be, a driver of the price going higher. So yeah, in the long term, I think gold will probably move a lot higher. In the short term, it has come off a bit, which I do think provides some opportunity now to probably add to a portfolio if you do want long-term exposure.
It's quite interesting, David, because gold will be quiet for a number of years, and then in some periods will just spike. Yeah, like what kind of investor then goes for gold and at what time?
I have no idea. I have absolutely no idea why people want to buy gold. It's a piece of metal that never changes. It just remains the same as it has. If you go to Fort Knox, they have tons and tons of the metal that people just watch all the time. I don't know what they're going to do with it and when it will ever be realized, or, and I don't think people wear as much gold jewelry as they used to. So I've never been inspired by gold. Gold companies, maybe gold miners, but and I've been wrong. It's gone up, and it's gone up for the reasons that Faheema identified and illustrated, correctly so. And it can go up, but I'm saying, so when do you sell it? When do you get out? Because it doesn't do anything. It doesn't pay you dividends. You just hope that the price keeps going up. So I would rather buy a piece of land on which we grow mealies than buy gold. At least you can eat the mealies.
You'll be careful of El Nino, though.
Yeah. Now, I know the gold bulls are going to come and attack me, and I'm going to get a lot of hate mail. But I've never been a gold bull.
Well, I mean, it's a quite interesting points that you make there, Faheema, and I'm wondering if this is maybe more for short-term trading, and also when you look at it, you're looking at it specifically from a gold miner's point of view.
Yeah, so the gold miners have definitely obviously benefited from that increase in the gold price. But, sadly, we haven't managed to really leverage off that enough because we've actually been seeing a decline in our gold production in South Africa because of a number of issues we're facing locally, the most obvious of which is the Transnet railway issues that has prevented mines from really producing at their full capacity. So they haven't really been able to take full advantage of this higher gold price. And then a lot of the gold mines in South Africa, they are quite depleted in terms of the gold reserves that are remaining there. The mining has become very deep, which becomes a lot more costly, more riskier for the gold miners in the country. So it's a very old industry, but unfortunately, we haven't really managed to leverage off this higher gold price, given the issues we've been experiencing with Transnet.
Yeah, and I was asking earlier what type of investors does actually go for gold. Well, the central banks, clearly. And yeah, second part of that question, central banks in many countries stocking up on gold. Why is that, David? Is it to kind of cushion themselves from geopolitical risk?
I think to cushion themselves from the dollar. More so than anything else. I know the dollar has been coming down, as Faheema mentioned, with lower interest rates, and it's put a bit of pressure on the dollar. But I think we're coming to the end of that. I would be surprised if the dollar goes weaker from here, as other central bankers also now start to reduce rates as well, and America starts to grow at a faster pace than the rest of the world. So we might have seen the best of it. I don't want to call where gold's going to end, but I think a lot of central bankers felt that maybe rather than keep on holding the dollar, this was an alternative to hold. They didn't want to hold the euro. They didn't want to hold the pound. They don't want to hold the South African rand. So I think that just maybe that isn't an attractive alternative. But it's not an easy market to read. I promise you, it's a very, very difficult market. And for the reasons I mentioned, it doesn't do anything. It just stays gold.
Yeah. Well, something else that's that may not be easy to read is Sasol. So with the genocide taking place in Palestine and other states Israel may want to get into war with, is it obvious oil prices, it is obvious oil prices will rise? Let me actually start there. Is it obvious, Faheema, that oil prices will rise, considering what we have experienced so far?
So there's been a lot of volatility in that oil price over the past few weeks on the back of course, the increased conflict in the Middle East. I think a key concern is that, Israel may decide to attack some of the oil infrastructure in Iran. And Iran is, of course, a very big producer of oil globally. It supplies about 4% of the oil globally. So there was a concern that, there could be supply issues due to that if that did actually happen. But we saw then the oil price come back down because OPEC did announce that it would be willing to increase supply onto the market in the next few months. And of course, we have other countries that can make up for that lost production if that is the case, such as Saudi Arabia. But now we've seen again the oil price back up today after, the hurricane activity in the US has really increased demand for oil there. And just general increase in geopolitical tensions, I think, in the Middle East, that's just really pushing that up today.
Yeah. And I mean, with that also, if the oil price does rise, is it good for our local Sasol stock? David, would you be looking at Sasol with maybe the crystal glass or vision that maybe the oil price might rise or not at this point?
It's got to rise a lot to make it attractive to Sasol, because Sasol is more a chemical producer than it is a oil producer. And, that's important. It needs chemical prices to go up, and chemical prices will only go up with a much stronger global economy. And they've got their own structural issues as well. But I mean, there is an emotive attachment to the oil price movements with Sasol. Oil price goes up. It's like Faheema was saying with gold, in South Africa. We hardly produce any more. We hardly produce any gold, from 1,000 tons back in the 70s and 80s, to maybe, 90, 100 here as well. But I think so. What happens is speculators assume that if the oil price goes up, you've got to buy Sasol. I think there's a lot more to Sasol than just the oil price movement. You've got the currency as well.
Yeah.
So they've got structural issues.
Yeah.
If you're going to take a long-term view on it, just be careful. You've got to see some changes coming there. I think when the global economy starts to pick up, which it's going to do, and then it might be time, if you can call the bottom in Sasol. Wayne always calls it, Faheema,
Well, Faheema, what would you be calling on Sasol right now? And it's actually quite interesting because, I mean, diversification is always good, but seeing that maybe, yeah, diversification on Sasol's front doesn't always work out for it.
Yeah, I think Sasol's been a difficult one. It's really oversold at current levels.
Yeah.
And like David said, you know, there is a very big chemical part of that business that hasn't been performing well because of the lower chemical price. So you'd have to see some recovery in the chemical price. And then there's other concerns with Sasol. You know, they're actually running out of gas reserves in Mozambique. They need to find new gas fields there in the next year or two, I think. So there's a couple of headwinds. And, you know, also from an environmental point of view, they've been facing quite a lot of backlash in that regard. But I do think it's very oversold at these levels. And
Yeah.
I can imagine once we see some recovery in the chemical price, it should start to move a bit higher.
Okay. Well, let us go into gaming. Ooh. I feel like somebody wants to get in on the action there. Let's get in on gaming. There was a question.
Chicago. Chicago and Loki. They're outside here making a hell of a noise. I think they're putting up a mock on the front lawn.
It's fine. We can get rid of them in about a minute. But there's a question here on Prosus. I'm actually looking for it. But basically, the viewer was saying it's just under $12. Oh, it had a nice rally and now dipped under $12. This is supposed to be cash generating, and surely Two-Pot will sadly put more cash into slots. David.
You reckon they're going to go gambling? You reckon they're going to go Hollywood beds?
This is South Africa. It's alive with possibility. Prosus, David?
Yeah, you know, I like it simply because I think that we're going to see a big pickup in tourism. You know, the trend that we've seen, I expect to continue as things settle down, as people get more money. And, you know, from that point of view, it's reasonably well placed. It is in a good position. The regional casinos worry me a bit. You know, those that made their names 10, 20 odd years ago, and that, you know, those are a concern. But I think in the bigger metropolitan areas where tourists are going to hang out, they'll do okay. But it is a touristy stock, yeah.
Yeah, indeed.
You know, not all of the assets are going to fire. Yeah. You know, the cylinders are firing, but you know, it's a good enough business.
Yeah, even Sun International's posted some pressure in those regional casinos. Your perspective on Prosus at under $12, Faheema, and maybe things that could trigger it or could provide stimulus for it if there are any.
Yes, I agree with everything David basically said. You know, this does depend on the tourism sector, and we are expected to see recovery continue there. We have seen it pick up quite a bit since COVID. And it just depends, I think, on just the general economic growth, which is expected to be stronger in the next year or two. And I think consumers will also be under less pressure now that we're starting to see some interest rate cuts come through. So I think a stronger consumer will definitely benefit the stock. I'm hoping that they don't use their money from their Two-Pot retirement to go and gamble. But I do think there'll be some further upside.
Faheema, I want to stick with you because David also just woke up. So I don't know how much time he has had to peruse through Sibanye's court judgment today. So that stock plummeting almost 9%. And this is on the mines. The agreements that they terminated on the mines in Brazil after a geotechnical event. I do believe that it was declared that it wasn't material or adverse, but also that they actually thought it was material. So, of course, there's still more coming out of that judgment. But the question is, one of the questions is, what does the court ruling today in relation to Sibanye mean for its share price going forward? And a lot of people asking if this is maybe an overreaction by the market. Faheema?
Yeah, Yeah, so I see the damages for that termination is now $1.2 billion that it seems that they need to pay. So yeah, I mean, in the greater scheme of things, I mean, it's not a huge amount, but given that Sibanye is already under financial pressure, you know, given where the PGM price has been, they've also had to sort of shut down some of their mines. And just this just kind of compounds the pressure we're seeing for this mining company. And I just think it just doesn't come at a good time, given the struggles that they've already been experiencing.
Yeah. So maybe, David, would you say that the reaction is maybe not an overreaction and that there could be clouds still hanging over it?
It's just another cloud, you know, and that's the problem. I mean, they've been under a lot of pressure with the palladium, platinum price, just also overall debt. You just have to look at the share price. You know, you just have to look at its performance from a height of about 75 Rand, in 2022 to where it is now, 18. You know, that cycle, that trend is not encouraging. And I don't think you need to be the person who calls a bottom. Let somebody else do that for you. You know, let them be bottom buying and pick it up. I just, you know, where companies are under pressure like this and where trouble emerges like this, another 1.2 billion, just leave it alone. You know, there's plenty of other places to go. Yeah. I always say you don't have to be the person who puts your finger in the dike, you know, to stop the flood. You know, let some other person do it for you. So I'm not a great. I love Neil Froneman. I love his outlook. I love the courage that he's had over years, and I follow him in person. But I think, you know, if you're handling other people's money, you can't. You know, you're not going to get wager points from Neil, you know, for supporting him. So just look elsewhere.
All right. Well, would you be looking at a Prosus? I bailed on Prosus at 780. It's gone under 750. Well, it's just over 750 now. I'm tempted to re-enter. Should I, Faheema?
So I guess, yeah, if you look at Naspers Prosus, the big exposure there, of course, is to Tencent and to China. And we're seeing an uptick in that price, I think, because of the stimulus measures that have been announced there in China. And if you look at Tencent, I mean, it's been very resilient. The gaming stocks in China have been quite resilient despite you know, the slowdown in the economy, and it's expected to just go from strength to strength. So I really, of course, like the Tencent investment. I think that will be a big growth driver going forward. So there probably is still potential to hold Prosus for higher returns or to still buy that. And some of the other investments in the portfolio have also really been picking up, like if you look at things like the food delivery side of the business. So, yeah, I think for now, it does depend a lot on the China recovery story. I saw today that we're expected to get some further details on the fiscal stimulus from China. They're having a finance meeting later this week. So hopefully after that, we will see some further positive movement in the stock price.
Prosus, David, do you still think that there's more juice left there?
I think for the reasons Faheema's identified, or you know, it is. I'm not a great Chinese follower. You know, I still mistrust Xi, and you never know what he's going to do. Whether he's going to clamp down on tech companies, you know, you can't predict what's going to come out of the government. But I think they understand that they need to keep the stimulus going. You know, for their own. For their own reasons and for their own safety. I mean, you don't want China to fall back, and they will get that 5% target, whatever they say. They'll decide on the weekend. So for that reason, Tencent's going to start creeping up, and it follows through to Prosus. You know, Prosus and Naspers, in my view, are nothing more than a proxy for Tencent. You know, I'm not a great believer in the other businesses. So if Tencent goes up, you're going to do okay.
Well, quite an interesting question here, and the viewer's asking, should they take a profit on Prosus and switch to Afrimat? Quite an interesting pair there. Quite an interesting pair. Faheema, David, any of you care to answer?
Well, go Faheema, ladies first.
Yeah, I have looked at Afrimat's recent results. I mean, they seem like they've been under pressure. because of that weaker iron ore price. We are starting to see some recovery there. And I would say it is quite an interesting switch, but this also again depends on China, the iron ore price and the steel price also depends on recovery in China and in that property market that has been in quite a significant slump. I think they're still going to be exposed somewhat to what is happening in China if they move from Prosus, which is also already heavily dependent on China and Tencent, and then into Afrimat, which is more of a commodity stock that will be influenced by China as well. So that is something to bear in mind.
An interesting one because you are exposed to different kind of sectors in China. David, switching from Prosus to Afrimat, would that be advisable?
I love Afrimat. I think it's a brilliantly run company. It is now dependent on where the iron ore price goes up. But I still think, you can't expect markets to go up in a straight line. They're not symmetrical, and down the line, iron ore will start to pick up. I don't know where it is now, whether it's at $100 a ton, but you'll get back to the 110, 100, wherever it is. And, for iron ore miners, there's a massive margin. So I like Afrimat and I like the way they run the business. But you're switching from high tech to something that if you drop on your toe is going to hurt, iron ore. So it's not an easy decision. But I mean, I think both are okay, but Afrimat, funny enough, if you go and look at the returns on Afrimat since it was listed, I think at one stage it gave Capitec a bit of a run. I'm talking from the time that it came onto the market, which must be about 15, 20 odd years ago. It's been a very, very well-run business in a very difficult environment.
Just before we get to your stock picks quickly, and I know we are running out of time, there's just a very interesting question on Afrimat. The company acquired a cement business while energy costs were high. Why not raise capital now while the script is still in favor? They will need capital to turn the old cement fleet around. If you're a holder, are you lightening up on it or adding? Just on what they've done with the capital and the cement business. David, would you like to?
No, the cement, it's a very good cement business, and I think it also aligns with the other side of their business. So, while they make aggregates and construction, well, it's very much aligned, and it's a good business. So you've got to wait for recovery, and down the line, recovery has to come. Without infrastructural development in South Africa, we haven't got the basis or the foundation on which to grow. So down the line, whether it's private equity or whether it's government, whoever does it, a lot of money has to go into that area. They're just well placed. So I think, they've got the two sides. The one, the iron ore side, which is obviously dependent on where in global growth in China, but the other side is dependent on what happens in South Africa, but well placed.
All right.
You want to take a SA bet. It's one of the better stocks around.
All right. We'll talk about money going to places. Faheema, where are you putting your money today? Your stock pick?
So my stock pick is Shoprite. I think it's looking more attractive now after the recent pullback. I know it does look rich in terms of its valuation, though. I do think that it is justified. So you look at the 4P, it's around 20 times. But given the growth, I think, that we've been seeing in the stock and the future growth projections, I think it is warranted. If we look at the online 60/60, for example, that's been doing very well. They've actually got plans now to fully take over that platform and to buy out their partner there. And I think they've just gained a lot of market share in the past few years from their competitors, such as Spar, also Pick n Pay. And now that we're heading into this rate-cutting cycle, I think the consumer will also be in a better position to buy some of the non-discretionary products the discretionary products that Shoprite has to offer, which will also help boost some of the growth there. And the general sentiment of improvement in the economy over the next 2 years will also be favorable for the stock. And bearing in mind that the Pick n Pay core grocery business has been struggling a lot, and if they're not able to turn that around, I can imagine that Checkers will just continue to take further market share from there, which will be a positive. So that's my stock pick.
All right. David, what's yours today?
Now, I'm in red socks territory, so I'm going for socks. The Red Sox, the baseball team. I'm going
Oh,
for SOX. Sorry, a bit slow. I'm going for I'm going for SOXX, which is the semiconductor ETF. And you know, I am a big AI junkie. I'm a big tech junkie, and I just think the movements that we've seen are just pointing towards, the scene in semiconductors. I think are just going to continue. I don't see this industry slowing down at all. It's still going to be the big driver of the kind of recovery in markets we see. So SOX gives you a very nice entry, a niche entry into all the big players in the semiconductor industry.
David, your mind's still fresh. You've just woken up. I've been at it the whole day. Thank you so much for your time. That is all for tonight's Stock Watcher. Thanks to our guests, Faheema Adia from Momentum Securities and David Shapiro from Sasfin Securities. Up next, I'm back with the close. Stay tuned.